Hello my people, welcome back to my channel once again. So today I'm going to be sharing my trade recap on gold, and I will be starting from Monday 4th August 2025 to 8th Friday 8th August 2025. So without further ado, let's go straight into the recap. Yeah. So first and foremost, we actually started the market from Monday 4th August 2025. The market actually opened from here, from this particular gap here. Can you see this gap? This is the um, new week opening gap here. This new week opening gap here. And I've always said something about this gap. Immediately there is a gap, there is also a closure. So irrespective, for the midnight, I wasn't there for this particular run, and the run wasn't so wide enough for me to actually hold on to that Asian session trade. I like taking my trades to cover new week opening gap, but this is a short move. So it wasn't something I could actually just jump into. It just happened very fast, very fast. And as you can see, after the new week opening gap, what did the market do? After the new week opening gap, after the market broke out of this psychological level, it actually came back, retest the psychological level, and immediately went to the next zone. Can you see, from one psychological level to another? So this is why I actually always have this my psychological level around the market. So if we are on a ranging market, I easily know through the psychological level. If we are on a if we are on a run, maybe like actually a trend, easily I know through the psychological level. And this particular strategy works mostly on gold, because this psychological level, I don't want to confuse anybody with psychological. It's actually a reaction zone. I call it psychological level because that is where you need to always look at when the market gets there. But it's also a reaction zone. A reaction zone. Places like where you see other blocks, they are also reaction zones. So this my psychological level easily points out other blocks for me. Easily point out high probability other block. Now my other block might be close to my psychological level. If I see other block close to the psychological level, or probably on the psychological level, it gives me a high probability setup that it's going to react on that particular level. So let's move straight into the trade recap for this particular week that just passed. And we'll be starting from Monday 4th August 2025, and we'll be starting with the London session. Everybody knows here that I trade both London session and New York session. But irrespective, what I did here was that after the market opened and we saw all this rally up and down for the Asian session, the London session actually started on this particular candle. Can you see this candle is showing us 8:10 a.m., 10 minutes after 8. So if I was actually going to take this trade, I will use this particular loan order block here that has a little imbalance and also lying on my psychological level. Can you see? And the market came, tapped into this order block and immediately started going down. But this wasn't a clear setup for me. Because number one, I didn't have any break of structure, I didn't have any inducement, I didn't have liquidity, just psychological level and order block, which I don't just jump into the market just like that. So what I did here was very simple. What I did here was, after the market created this particular reaction zone, that's this order block, I waited for a retest of this zone. Now, after drawing this particular zone, what I was waiting for was a tap of this particular resistance area. I always call this my order block top here as a resistance area. I waited for this resistance area. Now, why did I enter this trade? I have liquidity. I always tell you guys, if there is no liquidity, I am not entering any trade. This particular candle was supposed to mitigate this particular order block, but irrespective did not tap into the order block. But because of this liquidity, the market still find a reason to take out this liquidity. As you can see here, you will notice that the moment the market got to this liquidity, it gave us a little reaction, came down a little, and still went back again to take out this particular resistance. So the moment I saw this liquidity giving us reaction, I knew that this particular place is going to hold on to the market, and immediately my sell limit was on this particular level. And when the market came, tapped into my psychological level, can you see order block resistance area lying on my reaction level or psychological level? And immediately the moment the market tapped into this psychological level, gave us immediate 1:1 RR. Now, why did I exit this trade from this particular level? Okay, sorry for this illustration. I was explaining something to someone. So now, why did I get out of this market here? Now, this is a support formation on the 5 minutes time frame. This is a support formation, double engulfing candle, and with huge rejection. You will see a lot of rejections here. After I saw these rejections and reactions, I knew that the market was not going to have a lot of run to the downside. So irrespective, I rallied this trade to this part, from this zone to this particular zone, and it gave us a 4:1 RR. Now after I saw this support zone, on a normal day, if I see this kind of formation, this formation here, if I see this kind of formation, I always see it as my support level. Now, don't forget that it was the London session that creates this particular support. This support was created at around 8:25 a.m. and I knew that this support was going to clear out, was going to give the market a hard time to break out of it. And that was how I actually caught my first trade on Monday, and it gave us a 4:1 RR. So actually, let's look at the time that this market actually tapped us. And can you see 10:25 a.m. and we got out of this trade at around 11:20. Can you see? Approximately 1 hour. So that was how we actually caught this first trade. So what I was also waiting for was a break of this psychological level. Just the break. I was just waiting for it to break this level. And what did the market do? Came back, broke this level. Can you see? With good momentum, broke this level, gave us reaction, engineered liquidity. Did not tap into these gaps and did not tap into our psychological area. I knew that this was a liquidity, and I was waiting for a retest of this psychological area, because if you look here, this is a break and retest, and also because of my psychological level, I don't need to draw any table for the break and retest. My psychological level says everything about the break and retest. And immediately when the market came into this particular level, the first candle gave us a nice rejection. Still came back to the level. I waited for this third candle to close outside the psychological level. And immediately I saw the close outside the psychological level, I entered the market immediately. And that was how I actually caught this trade from this psychological level to this psychological level. That's from this zone here to this zone. And what time did we actually enter this market? 1:40 p.m. That is New York session. I always say this: if you give yourself limitations to time and price, your trades will be limited. And trust me, any trade you are taking, you are sure of it. Yes, you are sure of it, because you are actually following the session trend. So that is how we actually smashed these two trades on Monday. And this particular trade also gave us a 6:1 RR. And from that Monday, we didn't take any other trade again. We waited for Tuesday. So on Tuesday, got into the market at around started my analysis at around 7 7 a.m. I think, yes, it's around 7 a.m. I think I was on this particular candle here when I started analyzing the markets, and irrespective, I saw a rundown, and it was almost London session at around this zone. So the moment it got to 8 a.m., 8 a.m. sharp, what I was looking at was this particular double engulfing. After I saw this double engulfing, what did I do next? What did I do next? Double engulfing, this is a resistance already. Now, do we have liquidity around this resistance? Yes, we do have liquidity. We do have liquidity. And what did the market do? The market came, clear out this liquidity, and tap us into this resistance area. And that was how I actually entered this trade. And do you see? This liquidity is what gives me full confidence that this particular resistance was going to hold. This is an engineered liquidity. Had it been it's not an engineered liquidity, this particular candle was going to tap into this resistance and started coming down. But because they want to have a reason to come and tap into this resistance, that's why they engineered a liquidity here, that this is what we are coming to clear before we start coming down. And that was what happened. Immediately after the tap into this resistance, the market started rallying down, and I actually rallied that trade from this zone here to this particular zone, and the market gave us a 6:1 RR, and that is how we traded for London session. As for this trade, I got into this trade at around 9:20 a.m. London session, and I was also waiting for New York session on the 1 hour time frame. This was supposed to be a stop end. This was supposed to be a stop hunt. This was supposed to be a stop hunt. But irrespective, I didn't have a good confluence to enter this trade. I didn't have a good confluence. So I was actually expecting that if I could see a reaction into this psychological level, I might, yes, take this trade to this level, maybe retrace back, then still take to this particular level again. Yes, but the market did not work that way. They did not allow us to get to the main reaction zone before the market reversed immediately. So irrespective, on Tuesday, I only traded this particular setup, and I caught a 6:1 RR. So after that particular trade, I didn't enter any other trade again. I waited for Wednesday. Yes. So after that, on Wednesday, I got into my charts at around probably at around 5 a.m. Started analyzing, and I didn't see a clear setup also. I've given up already for Wednesday that I wasn't going to take any trade. But what made me took this trade was that this particular candle tapped into this psychological level at around what time? At around 8:45 a.m. That is London session. If I didn't see the tap of this particular candle into this psychological level at around that time, I wouldn't have entered any trade because there wasn't any good confluence. But you see, this is my reaction level. Has been what has been giving me good confluence on gold, and it has actually been working for me. So the moment I saw the tap of this particular level into this psychological level, immediately I actually entered with a market execution, and I entered at this particular candle here. After the close of this sell candle, the second candle was when I entered the market, and I actually rallied that particular market from this particular zone to this zone here, and it actually gave us a 4:1 RR. So that is it for Wednesday. That is the trade we took for Wednesday. Can you see time and price? I always say this: time and price. This tapped into the psychological level at 8:45 a.m. Always, I don't know how a lot of us look at psychological level. So if you want to learn how to actually draw psychological level on gold, do drop a comment that I'm interested on the psychological level on this particular video, and I will be actually messaging you privately so that I can actually teach you how you can draw this psychological level on gold. So that is that for Wednesday. This is Thursday. I actually got into this market. I stayed overnight for Asian session. I got into this market at around 1:30 a.m. That's Asian session. When I got into this market at Asian session, I was waiting for a clear setup, maybe probably a sweep of this liquidity before I buy. But irrespective, the market did not sweep this particular low, continue going continue going higher. So immediately I saw this pullback hammer candle with a break of structure. I knew that this particular order block was going to be strong because it's close to my psychological level. It's close to my what psychological level. So now let me count the rules for this particular trade. Rule number one, break of structure. Rule number two, we have a liquidity, we have inducement here. Can you see this is the imbalance, but this will stand as our liquidity, and irrespective, this is our loan order block. So already our rules is complete, and what I was waiting for was a tap of this particular level. After I broke this psychological level and tapped us into this market, this is 6:50 a.m. This is 6:50 a.m. They intentionally actually made the market moved before London opened. So the market moved very early. That's around 6:50, and that was when I actually entered this trade. And irrespective, the market actually gave us a nice reaction, and we actually rallied that trade from this zone to this zone, and it actually gave us a 6:1 RR, and that is how we actually smashed this particular trade. So on the second trade, after the break of this particular level, I was supposed to wait for a nice displacement. But I didn't see that displacement. But for this run, this run was too obvious that we were also going to get a break of this level, then maybe a retest. Let's draw the illustration here. A break of this level, maybe a retest, then another buys. This was what I was anticipating. But what did the market do? The market came, tapped me into the psychological level, and immediately took me out. Immediately, they didn't even get up to 5 minutes. Like within 8 minutes, the market tapped me out of this particular trade. And that was how I lost this particular trade here. I lost 1% of my account. And on the third trade, on Thursday, on the third trade, if you look at my TikTok account, you're going to get the hindsight of all these particular trades, because I actually started before I enter the trade. I normally take before and after, so they are all on my TikTok account. So now what made me enter this particular trade? Yes, after the retracement of this particular level, I saw a break of this psychological level. After I saw the break of this psychological level, what I was waiting for was a retest of this level again. Can you see? It broke psychological level. So what I was waiting for was a retest. And the moment the market came back into this particular psychological level, I entered the trade immediately. And immediately it started going our way. It gave us a 4:1 RR, which we rallied that trade from this zone here to this particular zone. So that was the trades we took for Thursday, which we took 3 trades, 2 TP and 1 SL. So that was that for Tuesday and for Thursday. Now going to Friday. Yeah, we had a lot of losses on Friday. I think Friday was a consolidation day for me. Friday was a consolidation day. If you notice, you will see that we are actually in one particular zone throughout Friday. Now, for this particular first trade, why did I enter this first trade? So this first trade was a fib level trade, It was a fib level trade, and now my fib level was lying around my psychological level also. I actually used the confluence of psychological level with this OCL and my fib level. I had three confluences for this trade. Three confluences. My first confluence was this particular golden zone here. I have a golden zone for my fib level. So let's take this fib level out. This is our fib level here. And my fib level is lying below my psychological level. It's lying below my psychological level. And irrespective, I use those two confluences, and I also use time. So now what happened here? I entered the market too early. I was supposed to wait for the candle that will be created to be swept first. It's normal in trading. It's normal. You cannot get it right all the time. But now the most important thing is, when you don't get it right, how fast are you able to act to get it right within the moment you don't get it right? That is the most important thing. How fast are you able to recall yourself back to your rules? How fast are you able to do that? That is what matters in trading. So the moment I lost this particular trade and it took me out, what I did was that I waited for another reaction that was actually given here. I now waited for a sweep of this low. This is an Asian low. Don't forget, this is an Asian low. Yes, this is an Asian low. So what I was waiting for was a sweep of this particular liquidity, and we'll see a nice reaction. I was actually targeting this particular high here. But on the 1 hour time frame, I saw a nice order block, and I saw a nice OCL, and also on the 5 minutes time frame, it was an OCL too. And this OCL is close to liquidity. So what I did was that I targeted this particular OCL here. And after the sweep of this particular level, what did we do? Waited for this particular engulfing candle to close, and then immediately I entered the market. And that was how this particular trade gave us a 4:1 RR. So after that, this particular trade, let me explain why I entered this trade. As you can see, after the sweep of this particular low here, you will see that we have a clear order block here with an imbalance, break of structure. Can you see? So rule number 1, break of structure, order block, inducement, then my entry. Now you see why I entered this trade. You see why I took this trade. Break of structure, rule number 1. Order block, rule number 2. Inducement, rule number 3. Don't forget, this inducement did not tap into this level. Inducement, rule number 3, and my entry. And irrespective, I followed my rule, but the market decided to do its thing, and it took me out of this particular trade. And that was how we traded for this particular past week. And irrespective, that's how we smashed all these trades. So now let's count our trades. How many TPs for this week and how many SL for this week? So we'll start from Monday. It's Tuesday. So 1, 2, 3 TPs. 4, 5, 6. 6-1, 6-2, 7-2, 7-3. So we had 7 TPs and 3 SL. So that is how we actually traded for this particular week. So thanks for watching my trade recap, guys, and I'm gonna see you on the next one. Peace out.